Evening traders, back again. So interestingly, the G20 did not provide us with any sort of major risk-off headline. In fact, things went pretty well for Trump, and certainly the concerns about North Korea didn't play out. So the attempts to sell dollar yen above 114 on Friday. Luckily, we did open below, and you had time to get out if that was your play. Sold a little bit here on one of the accounts and got out as soon as the market opened, because I was like, well, this is not the trade anymore. The trade was that there would be some sort of hard push on North Korea, and China would, push back and then lead to a tit for tat, and that would get out of control. So far, it looks like Trump didn't really do anything crazy in the G20. And there was no major push against him on the trade front either, just a collective sort of Paris Agreement sort of move, but that was widely anticipated, so nothing there. So in terms of where we are, we're grinding higher on the dollar yen. Stocks are pretty strong, and opened here, so higher on the DAX, and the US dollar is doing quite well, and the euro is doing quite well because it's in the midst of its own uptrend and its own little recovery normalization trade. It's holding up better than most, and this has pushed the euro yen above a key level, which is that 130 level. Throughout most of Asia, we've been holding above 130. If it gets more comfortable up here, we can look to the top side. Probably those gains would come from the dollar yen, and dollar yen's pushing up against its major resistance now, and so we've got that in the backdrop. So there's no reason to be doubting this dollar yen trade here. It's there's no catalyst right now to be selling off with it. Even at this key level, probably going to test it, probably going to break it, especially if euro yen wants to push higher. And pound yen is always getting support on dips as well. Now the pound's fairly weak at the start of Europe, nothing crazy just yet. More headlines over the weekend that might be in trouble. That could pause the rally, maybe even derail the rally. I don't think we're going to get to a major slump just yet without some negative headlines. I don't think May being kicked out of PM is that negative. Maybe for a day or two, but broadly probably someone a little bit more conservative, less conservative, a little bit more conciliatory towards a softer Brexit would get in as a result of the failure of the election. Now that would be interesting to say the least, but the May not being in is not the worst thing, right? May's pretty hardline, so she's talked up pretty aggressive Brexit stance and put her leadership on the line on the back of that. And so in terms of trades that we're in right now, we're in one trade still from Friday. That's the long Euro Aussie. It's working out okay. It's still negative. We've got in a little high. We should have bought at 150. You could have got a nice 150 level. It's in a nice uptrend. It makes sense fundamentally. RBA is not doing anything anytime soon, and the ECB is doing something probably in the next 3 months in terms of articulating its tapering regime for next year. Once you start to taper, it's a one-way street towards raising rates, probably because they're negative rates, and they have to get back to zero, pretty quickly, and then they can maybe slow down the rate hike cycle. But tapering is the first step in that one-way street, pretty much. Although US had its own sort of QE2, QE3, the ECB is unlikely at this stage to go down that road unless the whole economy globally slows down, and that's not really on the cards right now. Things are going along pretty well. Then you shouldn't expect the ECB to not taper. Yeah, so the euro's got a lot of potential here over time to break 115 and go back to 120. It's running up against some resistance. The US dollar's having some pushback, and we check that on the DXY, the dollar index. You can see that it's stabilized a little, and it's got a fair bit of room to push up. So perhaps in the short term, the euro might not have enough legs to break 115 at this point. Now the July ECB meeting's coming up. Unlikely to be the big event. Probably, if anything, you're going to get Draghi saying you guys have misunderstood us and talking it down. Now, if he keeps on trying to talk it down and the market starts to ignore him, that's a really key sign, guys. Really key that the euro's got that building momentum towards that break of 115. If he's successful and the euro goes into a 114, 112, 114, 110 sort of range, and the US dollar has a nice little recovery led by dollar yen, then that's also a possibility as well. But I suspect that the euro is going to be well supported, and that Draghi's attempts to talk it down, like his last attempt, will be muted, to say the least. And I think sooner rather than later that we do test 115 and potentially break it. With the euro yen now, well positioned to head towards 135 potentially. Let's just see. I mean, dollar yen's still got to break a level, and euro still got to break a level, but 135 and 140 is really on the cards now. This is nothing. Yeah, this is just a couple of weeks, couple of months rally. This is a weekly chart, so 3 or 4 months up there. And that would make a lot of sense if nothing changes. Now, risk off obviously will hit the dollar yen if we do get a correction at some point. Now, where would the correction come from? If it's North Korea, perhaps it's going to be China. If it's and China trade battle sort of thing. Also, just broadly, if the healthcare bill fails, perhaps the Trump's ability to get past tax cuts and new health plan will come into question, his whole agenda. That could derail the stock market as well, and the US Fed rate hike cycle. That would be majorly negative, and that could come in the form of a 10% correction in stocks, which would be welcome, I suspect. The market's been one-way action since Trump got in. So, from what, 18,000 up to 22. 2150 easily can pull back to 20,000 and still be in that uptrend. This is sort of madness at the moment, given the for me it's madness given the geopolitical backdrop, and I suspect the inevitable view that the market will come around to, that Republicans are not getting past any sort of major legislation. I mean, if they can't repeal Obamacare, how are they going to do a major tax cut that's unfunded? It's seems extremely unlikely, but that's moving forward. In the next few weeks, we're going to see the details of Steve Mnuchin's plan there. But yeah, right now we've got to focus on the risk on element, and probably going to be a good day in US stocks, and probably going to be a good day for dollar yen. So it's very hard to start selling up here. And if we're going to sell anything, we're going to sell something like the Aussie or the pound. A lot of traders have been asking about dollar CAD now, because dollar CAD had a nice little move on Friday on the back of those really strong jobs numbers, and whether this means that the Bank of Canada is going to raise rates. Now, yeah, I mean it's a pretty strong chance, but the market's been coming around to a rate hike from the Bank of Canada for a while now, so it's not shock news, and pricing it in is fairly well done almost. Yeah, this is a huge move in terms of, since the 135 fall on the back of that sort of hawkish commentary for one of the BOC members, and then the backing up by strong data and Polez's hawkish comments, we've come a fair way. Broken 130 on Friday, we got down to 128.60. Now this is coming in the backdrop though when oil is quite weak, and Russians are pretty adamant, so is OPEC, that they're not going to do any more cuts. And so the pressure is on oil. Pressure is on oil here, and broadly speaking, if oil makes a move for 40, dollar CAD's going to have a tough time at these levels. This is if rate hike or not, if oil continues to roll over, then you're going to see dollar CAD have a really tough time, and potentially, given the short-term positioning, we get a squeeze regardless of the rate hike, and the rate hike could be not happen. There's a strong chance it doesn't happen this week, and it's just 1 month too early, or a little bit too early, or it happens and the market squeezes afterwards because it's a neutral rate hike, so it's sort of a dovish hike, which you've seen most central banks do. Yeah. So how is that? What is a dovish hike? Something along the lines of just we're going to slowly raise rates, and we want to see the impact of raising the rates after each one we do. Alright, so yeah, be very careful, I think, chasing the euro, the dollar CAD down, or the euro CAD down, or the pound CAD down. I think the CAD's getting a little ahead of itself here, and the risk of skewing up to the top side with oil under so much pressure. Fell 3% on Friday, under pressure again today. I suspect it's at some point it becomes a factor here at these levels anyway for the dollar CAD. Sort of tempting fate by continuing to sell rallies this farther into the move. You know, you can imagine these levels being similar to, say, if Aussie, a hawkish member comes out, you know, inflation picks up or something, and Aussie starts to move up, and it's around 80 cents on going into an RBA month, where the market's like 50-50. Maybe they're going to raise rates, you know, quickly. You know, it could easily not be the case, and at the same time iron ore is falling. You know, in that sort of scenario, you could really see the market get caught out. And given that the US dollar has been on the back foot as well, and it's got so much room to sort of rebound, you could really get squeezed here, guys. So I'm just a little hesitant. Trader's been, you know, looking to sell. I mean, you can't argue that it's in a downtrend, but you can definitely argue that you're late to the party. What about CAD yen? No, I mean, that sounds pretty dangerous too. Yen's like the weakest pair out there, so you want the yen to strengthen. I mean, if we had a reason for stocks to roll over, and given that there was no comment about North Korea, Big Dave, I doubt we can play the CAD yen with any more surety. Let's have a quick look at it though. That seems even more dangerous than buying dollar CAD. I mean, I'm not really advocating you try and pick the bottoms or anything. I'm just saying don't be surprised. You know, it's not the cleanest sell out there at all. I think there's many ways in which we end above 130, 131 this week, especially if oil continues to dip. So that is my little piece there, little opening number. Another big move that's happening in the market right now is gold's getting smashed with the lack of any sort of comments on trade or North Korea. We've got gold falling to fresh multi-month lows. Now it's really close to that 1200 level, and below there's just daylight. So let's have a little look. It's really lucky to get out of that one actually. Little bit daylight here underneath 1200. That trend line comes around 1170, but that could easily get touched here. So in the world where yields are rising and stocks are strong, gold is the, you know, pretty much the go-to sell asset. Just does really badly in that environment. So you need safe haven demand, you need inflation, or you need stocks falling. You don't have anything like that at the moment, or yields falling. You know, so yields right now are all picking up around the world, and you know, that sort of movement leads to selling. This is the low from December, at the height of all the Trump got in madness, and it's double little top here, double little failure at 1300. You know, this is a pretty big test for it coming up at 1200. Say we break this 1195 level, that's it's going to look pretty ugly on the charts, and then, you know, if it's slipping, it's going to be hard to turn around. Now at some point it becomes really good risk reward though, given, you know, what I believe is a situation where the stocks are going to correct sooner rather than later, but there's no reason to rush that trade. You know, that trade can easily come you know, as soon as we get a reason for stocks to correct, which might be 1 month, 2 months, 3 months away, then we can go look to buy gold wherever it is, and you can have significant upside. But right now you're trying to pick a bottom, and you know, buying off a big level is just not the trade that we should be looking for. So yeah, those guys looking to buy gold, I think just wait. Yeah, just wait. You need some price action, you need something. Yeah, remember, US dollar is really strong, sorry, really weak, and gold's a lot weaker. in the last couple of weeks. Alright, let's have a look at some of the research, the week ahead. Week ahead's really light on data. US Swiss should not be a good sell if there isn't risk off, mate. Dollar Swiss is sort of like a mini yen, right? You don't go looking to sell US Swiss even at 110. I can see why you're asking that. Yeah, no, this aren't. Yeah, no. That's you're asking for trouble. Asking for trouble a lot. That's not a slow. That's not like a really impulsive rally. This is pullback and then a 3-week rally to test 110. That's a build. That's a building sort of attempt here, and the market can easily break 110. 110's not a nothing. It's so don't go selling just big figures. Don't go buying big figures like 1200 in gold. But at some point, yeah, US Swiss, if there's issues with German politics and the German election or Italian election comes up, or just generally stocks start to fall for whatever reason, they don't need too much of a reason, just technically they can fall from here, then yeah, Euro Swiss would be a bit of a sell too. Same of course as the Euro Yen, which is trending nicely but quite getting there, isn't it? Overbought. So alright, so week ahead. Just quickly, so we didn't miss any of the major news stories. Yeah, Croda was out. I don't think the dollar yen was rallying on back of Croda. Croda doesn't seem to have too much impact at the moment. It's much more, I think, on stocks rising and G20 passing without a hitch. Dollar yen was well supported on Friday. After the, if you're looking at the US 10-year, let's have a quick look at the US 10-year. Now we look at this every now and again, and the reason we look at this is just see where the dollar yen's at. Okay, in the last couple of minutes, the US 10-year have been falling. So dollar yen's probably sliding back a little bit in the last hour. Let's have a look. Ooh, not too much. Not too much. Holding up. If this continues to fall though, keep an eye on it. Keep an eye on it. Just profit taking probably so far. 230 is a key level if there is some sort of extended fall here. But this is interesting. This is interesting. This is this sells off a little bit more, then you're going to see the dollar yen fail at this level. So keep that in the back of our heads going forward tonight. Don't think there's any news out there to get stocks, so the bond market to stall, but perhaps that's the case. Yeah, there's really low news over the weekend. Didn't see anything there. But week ahead, everyone seems to be focusing on the Bank of Canada, so we'll check Barclays first. Markets will witness whether hawkish rhetoric from developed market central banks materialize in rate hikes. Alright, so the insurance cuts that the Bank of Canada did. So we got difference between, like, very similar to the Bank of England. The amount of rate hikes you can get from the Bank of Canada may be just back up to, say, 1%, right? Or back to 1.25%, like the Aussie. And the Bank of England might just get back to 1%. From its 0.25%, because it's you know, these insurance rate cuts that you got from the Bank of England and from the Bank of Canada in the last couple of years, they could easily, Bank of Canada after the crash in oil, that's different to a rate hike cycle. All right, those things you can take away without inflation or, you know, major source of a reason to be raising rates. Just you don't need the downside protection anymore. So when you're talking about you know, the first couple of rate hikes that are coming from Bank of England and Bank of Canada, they're not, you know, they're not the same as if the Australian dollar, so the RBA started to raise rates or the RBZ started to raise rates. Those guys usually go for a few times in a row. Tomorrow, Hayden's the Dove. So there's 2 speeches from the Bank of England tomorrow. Yellen's testimony for Congress, probably the highlight midweek. US CPI though isn't gaining in importance, right? US CPI is it is a monthly and month sort of view. There's a bit of variance in it, but really that's the low inflation has been the cause of concern for the members who are abstaining from hiking, and also those who have a slower rate hike outlook. So a pickup in inflation, which seems unlikely given oil's struggling in the last couple of months, is what's necessary for Fed rate hikes to be brought forward or be more aggressive, because that's the missing part of the whole US recovery story. Wage inflation, just general inflation, is just not there. So there's no real reason for the Fed to be ultra aggressive in raising rates. If you're talking about what pushes a central bank to start raising rates more quickly. Alright, the rates induced euro rally likely to moderate. Perhaps we've seen enough of the German yield move for now, because you know, the horizon that you're looking at in the for German yields, 2-year, 5-year, I mean, it's still unclear exactly what the tapering speed is. Without that, it's hard to know how many times they're going to raise rates. It's hard for the 2-year anyway to start to rise aggressively. But as we get closer to that horizon, you can start to see more and more rate hikes factored in. There has been a little shift and focus on Japan, on the politics. He had a loss in a local Tokyo election. Now, if that spreads and he starts to have more losses in some of the other smaller elections coming up, then perhaps there will be less faith in Abenomics, and that could undermine perhaps the BOJ's mandate there. But that seems a bit far away for us to start trading the yen on that. In general, though, that would make the yen stronger. Alright, Barclays is calling for a rate hike, but they're calling it normalization, not a hiking cycle. Let's see if I can find that report for you, because that seems like it's on point. What do we need to be focused on here? Vanchiv, it's that Euro Aussies from Friday. So the stop's pretty close, 149.50. We want the uptrend to continue, so most likely it's going to come from Aussie weakness. Yeah, Aussie yen and pound Aussie, I'm not really, they're both, I mean Aussie yen, like, Yen's pretty weak. Aussie's pretty weak. Pound's pretty weak. Aussie's pretty weak. They've not. It's not clear where to trade it. Whereas the euro's strong, Aussie's weak. US dollar's got potential to get stronger. Aussie's got potential to get weaker. So that makes sense too. So euro Aussie is technically correct and fundamentally correct. That's the sort of trade I like. So they actually expect dollar CAD back to 133. Trying to do this via options, in case they're wrong. They think that the rate hike after this is going to be Q1 2018, and perhaps one more into Q3. Where is this medium-term range in dollar CAD they talk about? Let's have a look at it. Just quickly on the weekly. So 125-ish. Yeah. I mean, there is a US dollar component of it, there's the oil component of it. So broadly facing, if they come across and it comes across like they're just cutting, raising rates to get out of the emergency rate cuts from the crash in 2015 from oil, then perhaps CAD's rally into this is a little overdone. And I suspect that with oil under pressure, that dollar CAD's going to struggle to make new lows. In terms of advocating buying it, perhaps some Euro CAD. Euro CAD must be at nice levels by now, if we want to get tactical on it. Bugging out charts. We've got a little bit of room up here. Look for the reversal after they raise rates. So on the day, right? On the day, if the market goes down, then straight back up. Then that's the sort of thing I might jump on. So this is on Wednesday night. If it goes down, then straight back up, then hop on the straight back up. Put your stops below the previous low. Alright guys, back to our review of some of the weekend news. We look at this one lately on Mondays. Goldman Sachs, charts that matter. So CAD was strong and stronger, which means for 2 weeks they've been gaining strength. The Euro as well. Pound was stronger than weaker. These are ones where you're seeing sharp selling. So ZAR, Lira, after they've, European Union's looking to block their entry. Goldman's looking for 127.30. Okay. Eventually test 125. They've got strong conviction on that. They don't usually go strong conviction on things. Strong conviction on long dollar Swiss, Euro Swiss as well. Strong conviction on US bonds continuing to rally. If we got up to 3.42, That's dollar yen 125 at least. In that same year, the 10-year German bonds might only get up to 1%, they suspect. Okay. Yeah, pretty much dollar yen's going to have the same fate as US yields at the moment. Alright, and they're looking for an extension here for dollar CAD. This is very technical, so let's keep that in the back of your mind. They're not talking about, you know, what Bank Canada says and doesn't say. They're just going straight off the technical there. Alright, nothing too crazy. And finally, we just check in what UBS specs here. I want to see what their view is on dollar CAD. Expect a rate hike. I don't see value in chasing CAD. We believe fairly aggressive hiking path is already in the price. Yeah. I mean, no one's going to come out and say, you know, look to buy dollar CAD, but that's pretty close. And also on Friday there's retail sales from the US as well. They're coming out the CPI. So not as big as the CPI, but still something to keep an eye on. Other than that, there is such a light data week this week. Chinese data came out today, but it was a non-event. Chinese CPI. Trade balance is a little bit more important on Thursday for the Australian dollar. But other than that, I think we're just going to have to react to the price action. And so there's very little to get involved with here at the moment. We'll wait for a trade to develop. Alright guys, I'll be back tomorrow at the same time. Hopefully we have some new story to play on. Perhaps it's the euro making a move towards 114.40, or it's a dollar yen breaking 114 sort of 30 on this way to 115. That would be big news in itself. If it doesn't happen and it goes sideways, then we might just have to wait for perhaps a pullback to get either euro yen or dollar yen on the pullback. Both those trades look pretty decent at the moment. If risk aversion picks up somehow, then we'll look to rotate into straight euro long. That should be fine in a risk off environment. But right now with risk on, it's euro yen and dollar yen as my trades. And euro Aussie if you want to play something a little bit on the side. Alright guys, good luck with everything. We'll be back tomorrow.